Actually, I'm gonna go even lower. I'm gonna go because we're breaking through. I'm gonna go 308. So right above this candle, we'll probably get taken out. There we go. Done. So first off, we're already kind of trading inside this positive gamma environment, which is not just like a be all end all for me, but like if this does make me lean a little bit away from being really aggressive with trades because typically I like trading in fast moving markets. Um, when we look at this overall setup here, we can see pretty clear like value is moving down, right? Like overall trend is down, but we have a conflicting open compared to yesterday's volume profile. So based on this methodology, we are moving bullishly. Even if we were to move bullishly, like we were expecting some move to the upside, we're kind of just moving into higher volume, right? It's not like we're moving into any area where we're in a low volume area that's like very appealing. And on top of that, we're in positive gamma. Now, another thing that I don't really like um, is that even if we are to short to the downside, there's just a lot of levels that are very close by, right? Just doesn't really seem like that optimal of a day for me. Like it's just not something that I really like see anything that I would even really want to take. Um, I always will still sit around for a very short amount of time to see if we get some like insane volatility. But when it really comes down to it in a day like this, I get pretty clear on like, hey, not really that interested in executing. Especially coming off a really good day yesterday, clean price action day. You don't want to be um, just trading just to trade because like I look at this like the only setup I would really like is like let's say if we had like enough like we had a move to the upside and had enough of some kind of reversal to possibly trade down lower towards this area down in here, this like 29,270, kind of this area. That'd be the only thing I would even really consider. Um, but other than that, I wouldn't really be super apt to trade. So we'll see if we get some kind of trade like that. I definitely would be lower risk. I would want it to be very clear, but I'm not going to spend a tremendous amount of time waiting around for it either. So for a day like this, I would definitely go down to like a lower time frame, get a little bit of more of a view. So what we want to see is if we could hit into some kind of key zone to the upside, possibly get some kind of reversal to take the trade down lower. But that would really be the only thing I would even consider. And if we look kind of like where are some key zones, I mean, if we look like relative to yesterday's, not yesterday's, I'm sorry, the day before yesterday's profile, which was Friday's profile, um, there's a VWAP, there's a point of control, but again, it's not like we're really trading into too much there. The only opportunity I would really see here is that there is some low volume we're kind of trading into. If you look right here, so there's low volume there, low volume there, and the market did kind of trade into that and get somewhat of a reversal to the downside. We like there's low volume in this profile up here, also in this week's profile. So the market hasn't really spent much time here, and we did trade into it and then had a nice move down. That was pre-market, so I'd want to see like, do we get that same kind of energy moving into the market? Or do we trade into this and possibly get some kind of like reversal trade? That would really be the only scenario I would even consider is either we get a reversal quicker in the day. Like I would want it to happen really quick because if the idea is that, okay, here was the tap and we're actually going to make a move down from that, I would want the open to be pretty, we have maybe one false move and then we move down. Or I would want to see if we can trade back into this if we don't get some kind of sharp move down, because if we don't get a sharp move down, that kind of tells me, okay, well, it's not really that strong of a trend, like directionally. So then I'm going to expect probably a pullback up into this level or something along those lines. But again, like I wouldn't be surprised to just not take a trade today. So to kind of be more specific of what I would want to see here using the DOM, we see a lot of aggression from buyers, right? Right now, as of now, it's getting rewarded. Nothing really insane in terms of volume, but we have aggressive buyers coming in. Market forms a balance, moves higher, right? Aggressive buyers coming in. Market forms a balance, moves higher. If that stops rather soon, I would want it to stop soon, and we get some moves to the downside and kind of trap some of these buyers, then that could be, grounds for a possible execution. Whatever I took today, I'd be low risk on, like 2 to 3,000 max position size. Like my risk would be that much. You can see we've got some of these passive sellers up here. Traded right into that. Started to get a nice little bit of a move down. Starting to get a little bit of pop here. So this is like 377. I want to see if we can get some follow through here. I'm going to get a position ready. I'm not entering it because if we do get this, I will take the trade. So 377 will be where my stop is. I'm not entering the trade though. Please like be aware. Not yet. We're getting some nice movement here actually. Yeah, I like that. I want to see if we can actually hold under this, if we get accepted because it's a pretty fast move. I like to always kind of wait to let that smoke clear. You don't want to get too antsy, but be decisive as well. Looks like we're staying under here. We're spending some time here. Not a lot of volume traded here yet. So I wouldn't call it necessarily full acceptance until we get at least some volume, at least some follow through. Because again, we want to, be patient with a setup like this. There we go. So at this point, I'd take this trade right here. A little less than $3,000 risk. Stops at the high. Because I am, trying to give this thing a little bit of space. Low risk, about half a risk, what I would usually risk on a full trade. And I probably won't throw more than like one opportunity at this if I end up taking a loss. So whenever I go into a day like this, if I can get really clear on what I want, even though if it's like, hey, today I don't think it's like a super high probability day, some of those days I'm wrong and it ends up being a good day, but I'm also not going to just try to force it. So I'll put myself out there, kind of like taking the trade that we took after yesterday's win, where it ended up being a small loss. That's okay. Like we still walked out of there making great money. But a lot of times you'll be able to put yourself in some of these lower probability environments with less risk. And sure, maybe it doesn't end up working out, but some of those days will end up being significant winners. So that's kind of the logic behind the trade. Now, the logic for entry, we traded up here into this passive area. What I was saying was based on the fact that pre-market, we traded into a key level and started to move away from it. If we were going to see a continuation of that move with the open, I'd want to see it happen quickly. Within 4 minutes of the market opening, we had a little bit of absorption up here. We waited to see we got that first break. The market kind of jetted back up. We got a second break, and I wanted to wait to see if we could spend some time under here. After that, the market did kind of just jet right back up, though. So it's not necessarily what we want to see, but it is positive gamma. So even though dealers probably aren't hedging around these levels too much because there's not really a huge level of gamma exposure around here, we are going to be a little bit more kind of wide with our stops than we usually would be. So now we're getting a little bit of movement here in our direction. I wouldn't move up my stops just yet. Like in these kind of environments, I'm not as, what's the word? Aggressive moving my stops up. I kind of give it a little bit more breathing room because I expect chop. This is kind of what we want to see here. Overall, what I would say is like downside targets. You could look at like low of day. You could look at this 265 area is probably where I'd start to get a little bit more aggressive on like trailing stops. If we even get down there, we're starting to see a little bit of aggression and volume picking up. So for me to manage this trade, like what I would want to see is like really what we're seeing right here. If we can get another nice push down, I'll probably at least bring my stops up to entry at a minimum, if not farther, because we're starting to actually get some aggression and one-sidedness. And I don't really see a tremendous amount of, acceptance yet, but like right here, you can watch these aggressors come in. I'm judging the grade of this trend, right? Like if we just hit this and just absolutely jet down, cool. I say, okay, cool. Like the market might have a nice little move. And that's where I start to get a little bit more aggressive with my stop trailing because, I don't want to see that once the sellers get a hold of the market, I want to see them hold on to it. Right here, I mean, like not really much of that until just now, right? So now that the kind of question is, does the market actually respond to it? Which it looks like it's jetting away from it. So nothing that makes me want to do anything just yet. But overall, again, kind of choppy. Price action is what's to be expected. So kind of letting it do its thing. If we can form another pivot and move down, might actively manage. I don't really like the way those sellers got trapped there, to be honest. Kind of watching here for maybe some active management. Not really seeing any of these sellers step in too much. Kind of watching to see here how this reacts to these more aggressive buyers. Probably going to take a loss on this trade. That's okay. I'll leave stops at the original area. Just kind of let them do their thing. If that ends up taking me out, it ends up taking me out. And that'll probably be the only trade for today. Now, if this thing were to move in our favor again, I would probably manage it a little differently. Once it moves again past our area, because I'd look at it like, okay, it had a chance to jet up. These traders that we originally entered the market based on being trapped, if we start to see a nice reaction from that position, that would be a positive to our overall idea. So I would look to try to start scaling up risk, or not scaling up, moving our stop loss up, scaling risk down. But overall, it's kind of like in these more, so what is this, 370s as we get under here. I'll go ahead and I'll move my stop to 371 just to cut some risk. So just cutting a little bit of risk here, nothing major, about 5 points. So, $300, which on a position that was already, $2,400 of risk, that's over 10% of the risk cut. Sounds like little things here and there, but those little things add up. The reason I moved it there was just based on the fact that we had these traders get trapped again, or at least I'm hoping they do. If they don't, then I think we're going to take a full stop, right? If we get back above that 371, we're going to go to 376. So that's why I moved my stops up there. Because again, like if we see this aggression here, if we're right, we should see the market move down from here. If the market moves back to this level, we're wrong. We're most likely wrong, and we could just cut that that loss a little bit down. Kind of like what I'm seeing here. We'll see if this gets some fall through. I'm not really convinced yet, and the same thing can happen here because remember this is kind of like where sellers got trapped originally, where we started to move against us. So now the market's kind of like trapped between these two areas, right? There's traders getting trapped on both sides. Overall reference is that buyers got trapped first. And overall market, in my opinion, looks more bearish than bullish, other than just like the way we opened today. So now let's see if we can get through this area and reclaim this zone down here. The video posted, Carson, it shows you how to drag and drop into your files. That's the way to do it if you're not an affiliate. So you would just drag that video that's in the Discord. There's really not much more in depth than you can go from that. You literally just drag the template into the templates folder. I don't know which video you might be talking. You might be talking about the one in the course. There's one in the Discord that goes through what you're asking for. So you might be having those. So pretty much just kind of gridlocked here. Whichever side wins this, like whichever we reclaim, we'll probably have a nice pop in their direction. We're out up here at like that 371 range roughly. I would actually go as far to move our stops up even just a little bit more, just a 369.75. Really in the 369s is fine. Now the reason for that is this is kind of where the current, if you look right here, the current value area high, also where the most of those traders came in was before that. So again, we're just cutting down, like, we went from 376 to 369. Nothing crazy, obviously, but on these really tight trades where I don't want to risk a bunch, I'm happy to take that, little bit of risk off. So it really doesn't make too much of a difference in the short term, but those kind of micro decisions do matter in the long term. So we're likely out of this trade. We got taken out on that one. That's okay. I won't be trading the rest of the day. That'll just be the only trade I take. I personally would expect the market to be a little bit choppier. I could be wrong. If, let's say if I didn't take that trade, the same setup that I just took, I would be less confident in it. And who knows, I might be wrong. Maybe this is the setup right here. Maybe it falls from here. That's the problem with choppy days. Maybe it falls from here. Maybe it does it again. Maybe it does it again and then does it. But that's kind of the overall idea for me, is that on those days I go out, have a very clear, this is what I'll take. But if I don't get it on that first, because again, and just to explain the logic of that, it's not because, I have a rule that is based around me wanting to win the first trade. No, it's based around like, if we're going to get a nice move on a day like this, like where we've tapped into a level pre-market, I'm already not super confident in the day. Typically, I want to see it happen quicker. I'm not saying that if it doesn't happen quicker that it won't happen. I'm just saying that if it doesn't happen quick, I know that the chances of it being a kind of more difficult day or back and forth, or that idea being wrong based on the current environment, which is like a positive gamma, you have conflicting directional signals. Those are kind of those days where I start to, grade the day as like a more likely to chop day. So hopefully that makes sense. No, so today would not be a 15-minute volume approach. It'd be the opposite of that, because that's a breakout strategy. Now, maybe that strategy works today and you look back and say, oh, it was a better setup. But like, for example, I was actually just doing this for this big piece of content I'm putting out. I literally can tell you the stats on this. Um, so like based on like the gamma environment, and this is for ES, it's very similar for NQ, but the numbers are just smaller on this. You actually have 1.7x larger of a follow through on a first candle setup if you are in negative gamma. So we're in positive gamma. You're likely going to get less size and breakouts, which if you're using that strategy is going to make it harder to hit that 2-to-1 risk to reward. And that's based on data. It's not based on vibes. That's just and it's also if you want to just kind of like look at like logic, if we know that gamma is negative, that means that we're going to get more breakouts. Then we probably would want to avoid trading a bunch of breakouts if gamma isn't negative, right? Um, if there's a solid dip below the gamma flip, how likely is the character to change? You want it to be pretty aggressive and hold there. And you also want to validate with order flow because you can watch. Like if you're trying to watch switch from positive to negative, then let's say if you hit into that level, well, what's going to happen in a negative environment? You're going to literally see a lot of moving or orders coming in that are accelerating the move into that level. But the thing is with gamma flips that you expect them to not happen. That's the thing, right? You don't expect them to happen unless you're in a negative environment. So Travis just asked a very good question. He said that using deep charts and deep JAMAs alongside each other, on deep charts it prints bubbles, but it doesn't show on deep DOM. Yes, because those are the as heat maps, right? Because you're expecting. So this is showing you aggression. This is showing you the opposite of what you'll see on a heat map. This is the opposite. You're not going to see it on a heat map. Heat map is passive. So you're not going to see that on a heat map. Okay. Always remember that. Very, very important. Priscilla, where to look for gamma when I'm not online? I try to post it every day. I'm trying to put up a dashboard for you guys, but soon I'll have Trader OS up. I would just be careful using a lot of the sources out there because a lot of them use naive gex. Meaning like if you're using it for the environment, it can be fine. Like there's like different tools that are all over the place for it, but a lot of them like they're not paying the money because it costs $30,000 a month to have the correct like actual real gamma data. But most of these tools are not paying that. And they're using naive gex, which basically it shows like it doesn't show which side the trades were taken essentially. So like a lot of it can be wrong in terms of the actual levels. But it can have a decent hit rate on environment. But I just try to post it for you guys daily. The dotted line on Deep DOM is the value area. That's the value area from the volume profile. Let's go, Keith. Congratulations on getting set up a Deep DOM. Gamma, yeah, Gamma's pulled from other markets. So you want to pull it from not SPY as much, but SPX. You can also blend SPY, but you need to because the goal here is to understand how to blend and translate levels from markets like SPX to EX or to ES. You can even blend from ES to NQ, which is a little weird, but yeah, you want to blend it from other markets because that's where the biggest exposure in the volume is. Somehow your bubbles look different and way bigger on what? You can change that on either of these. Those are just settings. So you would just go to I think it's like bubbles. Yeah, bubbles, and you just change it to the sizing. But again, if you just use my template, it'll be like the same as what I have. Not gonna lie, I kind of like this setup here. I like how it's above 400 as well. I'm actually gonna take another trade. I'm gonna keep it low risk again. I'm gonna do stops at 405. And I'm gonna go even lower risk from the last one. So $2,000 risk, a little less than $2,000 risk. And the reason I like this trade, and I did take it even though I wasn't planning on taking another trade, we got a lot of actual aggression that came in. A lot of these buyers try to pop the market out, but we didn't get a successful return on that effort. Also, we traded into a round number in a negative or in a positive gamma environment. So I know that there's likely going to be there's a lot of strikes at round numbers. Then we got a reversal from it. We also saw a little bit of aggression step in. Now I want to watch this one pretty closely. I'm not going to do anything too early on, but as we move, I'll probably manage it a little differently than the last. But again, I'm just taking very light risk on it. So if you're trading alongside me, you should be risking like less than half of what you usually do. Because I'm looking at these kind of like feeler trades. Like I wouldn't be too surprised to see it not play out. But I also like the setup, and it's just like when I'm staring at this and it's kind of clear, I feel like a dummy not to take it. That's one thing I actually try to work on myself. Because like even myself to this day, I try to work on and always improve. I think that there's a lot of times where I have in the past, like I'll be like, I like commit to something and then it becomes stubborn because you feel like you're like deviating from your plan if you don't. And to be honest, this is one of those things that like most of you guys that are newer, this probably doesn't apply to you. But once you know what you're doing, like for example, let's say if I sit down and say, yeah, I don't really like today. Well, like, okay, well, what if something happens that is a clear as day trade? You're just going to ignore it. Um, and then this is tough. It's very tough because what ends up happening sometimes is you know deep down that you should just take the opportunity. But then if you take the opportunity and it loses, if you're a newer trader, you're like, oh, I knew I shouldn't have done that. Oh, I knew I shouldn't have done that. Right. And this is where hindsight bias will kill you, is because you can't chastise yourself for making decisions without the data that you have now. Like again, like always 2020 in hindsight, but you also probably don't remember because hindsight bias. You're biased by hindsight. Like the trades that ended up working out that you wish you would have taken, your brain kind of like shoves those to the side because it's painful, right? Like what I mean by that is like the days where you psych yourself out of good trades, you kind of are easy to forget those because it's like I don't want to think about that. Um, but that's one of the things that I try to work on in myself is like if I see a very obvious trade setup, even if like maybe I had like the one thing I won't go past is like my risk limit. Um, that's something I'm a little more strict on. But like if it's just something like today where it's like I didn't like what I saw and then took like a freaking 2K loss, it's just kind of like, I mean, really, like, is it that big of a deal? It's not, right? So that's kind of the logic behind that. I want to see is more of a return here. We're kind of just bouncing off this point of control. Point of control is moving around a little bit, but we were just bouncing off of it. I'd like to see some follow through soon, sooner than later. Probably just floating a little above or actually up a little bit on our trade. I'm going to go ahead and actually move stops to entry on this. So de-risk. The reason for that is I was looking at the value area high. It's a little bit above this trade at 388, but like honestly, like I don't really want to trade this or stay in this trade if I don't get a good move here. So I'm happy to just move stops to entry. So de-risked on that trade. Overall, I like the way it's moving so far. We're starting to get a little bit of a return here. Starting to see a little bit of a pickup in volume, but my mind is always going to like, I'm judgmental of this trade. I'm like, prove it. Okay, pickup in volume. Let's see. Okay. Okay, there we go. There we go. That's what it hurt me. So I'm gonna go ahead and I'm gonna move this stop to 351. Secure a little bit of profit here. What is this? I'm actually gonna go to 340. 340 and 2 ticks here. So you can't let your ego win. You can't let your predisposed bias of what you want win. You have to be. That's what I mean when I say rational. Irrational would be for me to not take a trade that I know I'm looking at and I have confidence in. So what is this 3? I want to see where this really picked up. Now, what my mind goes to now is I'm seeing where this big volume spike came in. It's like 335. So I want to move stops to 335. I don't want to see us get above 335. Ideally, I want to kind of watch to see if we can even do better than that, but that's also right above the value area, so I'm happy with that. I want to get more. What is this? So that's 3. I would actually go to 3. I'm going to go to 331. And if we get taken at 331, I'm happy. I'm okay with that. Gives us enough room to where if we kind of do start to make a move down, we can still be in the trade. So what was that absorption right here, or hopefully absorption 323? I'm actually going to go down to 324. So it stops at 324. We should get a little bit of a squeeze here. What is that? 317. I'm going 318. Actually, I'm gonna go even lower. I'm gonna go because we're breaking through. I'm gonna go 308. So right above this candle, we'll probably get taken out. There we go. Done. All right, cool. So made back our loss and then some. Happy with the performance. I think that's a very good lesson that I want you guys to take note of, is that you can't always, like, even somebody 10 years in this game, that is the only difference between me and you. It's not that I never get things wrong. It's not that I don't make mistakes. It's that I quickly am aware of them and I quickly correct them. I want you to remember that, because your perception of what you want to become good at this is that you never make mistakes, so that you never fail, or that things are never hard because you're so prepared and you're so educated, but it's just not how it works. It doesn't get easier. You just get better, as they say. Okay. So I want you to really like screw the trade. Like, I mean, the trade's a good whatever, but like, I want you to understand like the art of like trusting yourself, the art of letting go of your ego, It doesn't matter if maybe you said, hey, I wasn't going to take a trade today. If you get your setup, like you're a trader, you're updating your perspective and your decision making based on new data. You're not just trying to predict, we're trying to react. Okay. And now this market might go further. The reason I was very aggressive with that is because we kind of hit into this low. We also had this area right here where we had a nice absorption, nice jet away. I just wanted to be very aggressive with my stop trailing. The only thing I would say, actually, I maybe should have managed this a little differently. I maybe should have had my stops left there. I might regret that one. We'll see. We'll see. But if so, it is what it is. I'm so happy with the performance. So trade again. Let's go over the trade really quick. So from the top, starting with the day with the idea that, hey, we're in a positive game environment. What does that mean? Well, that means that options dealers are likely to fight moves into levels where they have exposure. So let's just take a look at this, okay? So let's just say, if you guys have ever traded options, if you haven't, just so you know, strikes are at round numbers, like 29,400, okay? So when we look at areas where those dealers are likely to have exposure, then we know that it's going to likely be at round numbers. So let's say if you're an option seller and you've sold calls and the market is rallying up to 400. Well, where you start losing money is at 400. Just think of it like this. And there's different scenarios of this. There's going to be somebody correct me that this is not how game works. I'm aware there are different scenarios, okay? But I'm just trying to use this for an explanation. Dealers are going to fight at those levels, okay? They're going to try to dampen the move. So what do we see here? Well, if we look at that 29,400 on the chart, look at that. Do we have proof that there might be someone not wanting the market to go past 29,400? I would say so, right? Do we have a bunch of unaware market buyers rushing right into that? Yes, we do. You can see it right here, right? We saw aggressive buyers here, and then all through this candle, we saw aggressive buyers. We did see some aggressive sellers, but mainly aggressive buyers. But then we ask ourselves, who got a return? Did buyers get a return? No. Most of the buyers got in up here, here. The market tried to give a return, actually, and this is even more of a higher likely reversal, is when you get a return and then it quickly diminishes. So you saw them get a return here on the right, here on Deep Dom, and then what? It quickly diminished. Now, I didn't execute until this candle right here had moved a little bit down underneath this, and we were seeing even more aggressive sellers come in. So we executed. I put that stop right above that round number of 400 instead of the top of the wick, just based on the idea that this is where we wanted to see the market kind of hold from. And that was really the trade. I mean, it's that simple. Now, I'd say I might regret not moving my stop right there. That's probably the better. I could have been better on that management. I should have just kept my stop at that 324, and I did move it there, and then I moved it up too much. But at the end of the day, I'm not too upset with it, right? Because I was really just looking to try to take it like that 262 area, which is a big difference. We moved it 308 to 262. That's a 40-point difference on 3 contracts. That's a couple $1,000. So I could have done a little bit better there, but it is what it is. I'm happy with the performance overall. But to kind of like outline why I was even looking for that kind of trade in the first place, well, let's look at what happened pre-market. So if we're in let me go full screen on deep charts. If we're in and this is going to be a really good exercise actually, because this teaches you how to trade like kind of an indecisive day. So let's just take a look at the overall landscape of the market without price, just with profiles. Okay, what do we think the market is like doing? Just don't overthink this. Is the market bullish or bearish more right now? Are we trending down or up? Okay, down, right? So if we're trending down and we're in positive gamma, what kind of setups do you favor? So if we're trending in a downwards market in positive gamma, remember, positive gamma, we're going to favor sweeps and reversals. So what are we likely going to get to try to get into a good trade? You likely want to get a sweep into, and this is the classic, liquidity sweep into fair value gap, but we're playing liquidity sweep, we're above previous day's highs, into low volume node, right? We had low volume here, and low volume on the week. So this area, if we really want to like get specific, it's like this area right here hadn't really been traded in. So we saw pre-market, the market traded into that area. And what happened? we got a reaction. So if we are going to say, hey, that there was a pre-market reaction, what do I always say to you guys? I want to see happen to confirm that. I say I want to see follow through in the RTH, meaning the cash session. Why? Because this is when real volume comes in. And when real volume comes in, you see what the actual intention is. Now, that's why I said I want to see this happen rather quickly. That's why I took that first trade, is that if we have, here's the open at 9:30. Well, if I'm saying that I want to confirm this move, then I want to see this kind of happen quick. What do I want to see? This on a micro scale, because I've already seen it on a larger scale. I want to just see us get above some high, trade into some, recent level, and then the market sweep down, right? And that's what we saw on that first trade, and it failed. That's fine. But then we hit into a better level, got the same exact setup, actually a better setup because we're actually trading into that gamma level, right? And why is it a gamma level? Well, because we're expecting, since positive gamma, we're expecting reversals, and we hit into an area that was a round number with that 400. So it's a round number. We know there's option strikes there. We also saw it on the heat map, and we took the trade and managed it just like normal, just being aggressive. Now, again, overall, I could have been a little bit better on the management. Maybe I cut off this drawing and we see that I really regret that. Just flying to the downside. If that happens, it is what it is. It's not the end of the world. But that's kind of how you can navigate a little bit of a trickier market. It's a really good example today. Also, a really good example of like having a good mentality. Because and this is what I want to really like display to you guys. It's not about getting so good that you never make mistakes. It's being aware that you do make mistakes and being aware when you make them and quickly making another decision.